Berhad is one of the Malaysian leading private healthcare provider. KPJ was established in 1981, is a subsidiary of the Johor Corporation and was listed on the Bursa Malaysia in 1994. As of 2026, KPJ operates for the 30 specialist hospitals in Malaysia, with the additional facility in the Indonesia and also Bangladesh. KPJ offer medical education through the KPJ Healthcare University and provides service in pharmacy, pathology and senior living care. In terms of the financially, KPJ has a strong revenue over 4.1 billion. The company employ is more than 17,000 staff and work with the 1,400 medical consultants. The chairman, the Tan Sri Datuk Sri Dr. Ismail bin Bakar, has over 30 years of experience in the Malaysian Civil Service and previously served as the Chief Secretary to the government. The market capital is 11.6 billion, so it's classified as a largest cap company. So what happened is it indicates strong investor confidence, financial stability and the long-term growth. So it's subject to the Bursa Malaysia regulation, ensuring the transparency and good governance. In terms of a number of shares, KPJ has about 4.8 to 4.9 billion issue ordinary share. So the share is increased due to the long-term expansion and also the hospital development. And then the growth is driven by the strategic financing, not for the short-term funding. And largest share is based on the reflect of the KPJ major status and larger scale operation. Lastly, about the number of the share is directly contribute to the market capital. Now about the Sharia. So Sharia is determined by the Security Commission Malaysia (SAC). So the assessment is based on the business activity and the financial ratio. KPJ is considered as under Sharia principle. Overall, the total dividend for the 2025 is 4.23 cents per share and is a continued focus on the digital transformation, including the AI via the Melati platform. Next is a subsidiary, Sensi secure a new hospital system project. Also, the EPF is increased its stake on the 31st December 25, showing the strong institutional confidence. And then KPJ is remain cautiously optimistic for the FY 2025 despite occupancy rate concern. Regarding about the announcement, there is two. First is about the solar energy project. The KPJ is a partner with the TMB for the largest private healthcare solar project in Malaysia, and is expected the capacity of a 4.85 MWP by the end 2026, and also is a help in terms of reduce the energy cost and also the carbon emission. Is a support by the Malaysia Low Carbon.
Assalamualaikum Doctor, my name is Umi Amira and I will continue to present on analytical tools outcome. So this graph shows the company's revenue, gross profit, operating profit, profit before tax and net profit from 2022 until 2024. Overall, our components shows the clear upward trend. The revenue increased steadily across the 3 years and these increases was followed by improvement in gross profit, operating profit and the net profit. This indicates that the company is able to grow its sales while maintaining profitability, reflecting a strong operational performance. Next, this graph presents the year-to-year percentage change in revenue and profit. From 2022 until 2023, the company experienced significant growth, indicating a strong expansion phase. From 2023 until 2024, the growth continued but at a more stable rate. This suggests that the company has moved from rapid growth into a more sustainable and controlled growth stage, which is financially healthy. As we can see in this index trend analysis, 2022 is set as the base year at 100%. Both revenue and profit in index rise above 100% in 2023 and increased further in 2024. This confirms that the company's financial performance has consistently improved compared to the base year, showing long-term growth rather than short-term fluctuation. This common-size income statement expresses each profit component as a percentage of revenue. This graph shows that the gross profit margins remain relatively stable, while operating profit and net profit ratios gradually improve over time. This indicates that the company is becoming more efficient in managing costs as a larger portion of revenue is converted into profit. Next is the year-to-year change balance sheet. This graph illustrates the year-to-year change in total asset, total liabilities, and total equities. In 2023, there is a slight decline in asset and equity, possibly due to restructuring or repayments. However, in 2024, all components show positive growth, suggesting that the company has recovered and strengthened in its financial position. Here is the balance sheet index trend. Use 2022 as the base year. By 2024, total assets increased above the base level, while liabilities also rise slightly. Equity remains relatively stable across the 3 years. This suggests that the company is expanding its asset base while maintaining a balanced and controlled capital structure. This graph shows the composition of asset financed by equity and liabilities. Across all the 3 years, equity consistently accounts for approximately 63 to 65%, while liabilities represent about 35 to 36%. This indicates a conservative financing strategy which reduces financial risk and support long-term stability. This graph compares the absolute value of administrative expenses over time. We can see that administrative expenses increased from 2022 until 2024. This rise is expected as the business expands, hires more staff, and incurs higher operational costs. However, the increases does not necessarily indicate the inefficiency on its own. In this index trend graph, 2022 is taken as the base year at 100%. And administrative expenses increased to over 120% in 2023 and further to around 157% in 2024. This shows that while expenses are rising, they are doing so in line with business growth and expansion activities. The final graph presents administrative expenses as a percentage of revenue. We can observe a declining trend from about 46% in 2022 to approximately 40% in 2024. This indicates improved cost efficiency as administrative expenses take up a smaller proportion of revenue over time, despite increasing in absolute terms. So, in conclusion, the 10 graph collectively shows that the company has experienced strong revenue growth, improving profitability, better cost efficiency, and a stable balance sheet from 2022 to 2024. These trends suggest that the company is financially healthy, well managed, and positioned for sustainable long-term growth. Thank you.
The company liquidity is adequate but declining. The current ratio is above 1.0 but falling, showing tighter working capital. Acid test ratio is very low, indicating weak immediate liquidity and reliance on inventory. Quick receivable collection shows good cash management, but overall liquidity risk is rising. Strengthening cash reserve and controlling liabilities are needed. The company's solvency is strong and stable. Debt to equity stays around 0.55, showing moderate leverage and reliance on equity. Long-term debt fell from 0.3 to 0.22 in 2024, strengthening the balance sheet. Time interest earned rose to 8.93, showing strong ability to cover interest. Overall, leverage is controlled and long-term risk is low. It has shown mixed efficiency. Cash and receivable turnover are strong, rising to 126 and 110 times, showing quick collections and efficient cash use. Working capital turnover also improved to 1.02 times, reflecting better short-term efficiency. However, total asset and PPE turnover remains low, showing underutilization of asset. Overall, cash and working capital are strong, but asset use needs improvement. Company's profitability is strong and rising. Gross profit stays at 1.00 while operating and net margins improve to 0.61 and 0.53, showing better cost and expense management. Return on assets doubles to 0.12 and return on equity rises to 0.19, reflecting efficient asset use and higher shareholder returns. Overall profitability is solid and sustainable. Company shows strong shareholder value growth. DPS rose from 0.02 to 0.17 while BVPS stays stable at 1.3 ringgit. PER increased to 28.25 with share price at 2 ringgit and 43 cents, reflecting market confidence. EPS also improved and dividend yield peaked at 10% in 2023 before normalizing. Overall returns and market recognition are strong.
For my part of the presentation, I will discuss KPJ's cash flow and what it shows about the company's financial stability. Starting with cash flow from operating activities, in 2022, KPJ recorded a positive operating cash flow of 105.3 million, which indicates that the company was able to generate sufficient cash from its healthcare services. This suggests relatively stable operations and effective cost management during the year. Moving into 2023, operating cash flow declined to 58.8 million. Although the figure was still positive, the drop shows that KPJ experienced higher cash outflows. And based on the notes to the financial statements, this was mainly due to changes in working capital, such as increases in receivables and higher operating related payments. In 2024, operating cash flow turned negative at 124.5 million, indicating increased pressure on cash generation from day-to-day operations. This means that while KPG was still profitable on paper, the company faced challenges in converting its operational performance into actual cash. So to sum up, KPJ's operating cash flow became less consistent over the 3 years, indicating challenges in generating cash from its core operations. Moving on to investing activities, KPJ recorded positive cash flows across all 3 years, amounting to 39 million in 2022, 137.9 million in 2023, and 284.5 million in 2024. These inflows mainly came from asset disposals and dividends received from associates and subsidiaries, while spending on new assets remained relatively controlled. This shows that KPJ relied on its investments and asset base to generate cash, especially in 2023 and 2024. Lastly, for financing activities, KPJ reported negative financing cash flows throughout the 3-year period with 144.7 million in 2022, 196.1 million in 2023, and 161.6 million in 2024. These outflows were mainly due to loan repayments, lease payments, and dividends paid to shareholders. Although the company did raise some borrowings, repayments were higher, indicating a focus on reducing debt levels. Overall, KPG's cash flow performance from 2022 to 2024 presents a mixed but generally stable view. The company was able to maintain positive total cash flow across all 3 years, supported mainly by strong inflows from investing activities and disciplined financing decisions. KPG's asset base and investment income help support liquidity during periods when operating cash flow was under pressure. And at the same time, the decline and shift to negative operating cash flow in 2024 suggests that KPG needs to improve cash generation from its core healthcare operations. While this does not immediately indicate financial distress, it highlights the importance of better working capital management and operational efficiency moving forward. So, based on this analysis, KPJ appears financially supported in the short term, mainly due to its strong asset backing and financing structure. However, its future prospects will depend on its ability to strengthen operating cash flow to support sustainable growth and stable returns. This will be an important factor when we present our final investment recommendation.
Okay, I am Aina Nadira binti Muhammad Radwan. I will present a prospective analysis financial of KPJ Berhad, highlighting both past performance and future projections based on recent and forecasted financial data. Recent financial performance, 2023 to 2024. So in 2024, KPG Berhad experienced substantial growth, with revenue increasing by 35% from 288.3 million ringgit in 2023 to 390.1 million ringgit. So the gross profit reflected this growth, maintaining a gross profit margin of 100%, and operating profit rose from 171.1 million to 238.4 million. The company's key ratios indicate significant sales growth and effective profit management. Administrative expenses grew proportionally and borrowing costs increased slightly. Despite rising expenses, profit before tax and net profit increased considerably, demonstrating improved operational efficiency. Future financial projection, 2025 to 2026, looking ahead, KPG Berhad forecasts continued revenue growth, reaching 486.5 million in 2026. Operating profit is projected to rise substantially to 359.3 million ringgit. Revenue is expected to nearly double from 2024 to 2026, supported by expansion and strategic initiative. Asset and liability outlook from an asset perspective, non-current assets remain stable while current assets are expected to grow, boosting liquidity. The company's liability also increased slightly but remain within manageable levels, ensuring a healthy balance sheet. In conclusion, KPJ Berhad is positioned for strong growth in the upcoming years, supported by robust revenue expansion, controlled expenses, and a stable financial structure. Continued focus on operationally efficiency and strategic investment will be key to the positive trajectory. Next, we will provide a comprehensive overview of the share price movements of KPJ Healthcare Berhad over the past few years, focusing on the period from 2022 to early 2026. This analysis aims to examine the key trends, technical signals, and overall market sentiment that have influenced the company's stock performance. By understanding these trends, we can gain insight into the company growth trajectory, investor confidence, and potential investment opportunities. The data highlights significant fluctuation, recoveries, and bullish phases that are crucial for making informed decisions in the market environment. Starting with 2022, KPJ Healthcare share price experienced a period of volatility beginning at 1 ringgit point 4 cent in January and ending slightly lower, 1 ringgit in 1 cent in December. The fluctuation during this year, including reaching a high of 4 ringgit point 4 cent in February and a low of 83 cents in July, reflected uncertain market conditions and some challenges within the healthcare sector. Moving into 2023, the company shows signs of recovery with the share price gradually rising from 1 ringgit and 3 cent in January to 1 ringgit point 44 cent by December. This steady growth indicated increasing investor optimism and improved financial performance. The most significant development occurred in 2024, where the share price demonstrated a strong upward trend. Starting at 1 ringgit point 61 cent in January, it surged to a peak of 2 ringgit point 49 cent in November. With notable fluctuations along the way, this meteoric rise suggests a bullish market sentiment driven by positive fundamentals, market confidence, and possibly favorable sector outlooks. Overall, the period from 2022 to 2024 marks a year of recovery, growth, and increasing investor interest in KPJ Healthcare Berhad.
So should we invest or not? Based on the technical analysis, KPJ Healthcare Berhad is worth investing in the stock is in a strong and well-established bullish trend because it is supported by the positive price structure, healthy trading volume, and the RSI also is above 1050, indicating the strong upward momentum and market confidence. However, since the current price is near to the resistance level, so is a better approach to invest during a pullback. To key support level as a after confirm breakdown above RM3 ringgit with a strong volume, as this is a proper timing in order to manage the risk more effectively.